Welcome Pramod Amthe, Head of Institutional Equity Research at InCred Capital on the show right now. Hi, a very good afternoon, Pramod, and great to be speaking with you. Firstly, Pramod, help us with your take on the markets then, because from those March lows, what a move that Indian markets have seen. But given the up move, Pramod, help us understand that what is the strategy that you are building at this point in time? Are we comfortably sitting in terms of the valuation, as well as what's your outlook when it comes to the broader end?
I think valuation comfort is definitely there, but where the concern is, we are still don't seem to be bottoming out on earnings, in spite of being a strong, seasonally strong quarter March. The expectations are pretty tepid, just around 2% QOQ growth in the Nifty 50 earnings versus a full year and a single digit YOY growth. That doesn't give a confidence of mid-teen earnings to sustain, and especially events of geopolitical tensions do bring in a negative surprise and test case the earnings volatility, and which is not factored in fully in the extent which the bounce back came in, where I think the participation from small and mid caps have been much sharper, almost like twice the momentum as compared to the large cap. That gives us that amount of concerns, as many of these companies may not be as well balanced to handle such shocks on the both international and on the domestic geopolitical tensions.
Pramod, hi, this
So
is
we remain cautiously optimistic on that sense. Yeah.
Right. Pramod, hi, good afternoon. This is Ankita also joining in. Pramod, I'll take a leaf from what you just said that, despite a seasonally strong quarter, quarter four earning consensus EPS has just been, the expectation has been in just single digit of 8% on a year-on-year basis. There has been no respite on the EPS, downgrade trend as yet. When do you see a reversal coming in? And also, wasn't the earnings downgrade already priced in when we saw that drawdown?
So I think it has to be seen in the context of how the macro effort by both the government of India and RBI will play out. Our sense is we will get some handle about the outlook management commentary from the April-May for the full year, and people will bake in those numbers first. Second, we need to see some revival at the end markets by the both interest rate reduction and also from the income tax reduction. So hopefully from July, August, we should be preparing ourselves for some settlement and then a recovery of demand, which should ultimately drive down, should set in the better expectations for the rest of the year. So might be a couple of more months, unless until we see some shocks like what we are currently going through. Other than that, we expect the bottoming to happen somewhere in the mid or the early part of September quarter for the EPS momentum.
Pramod, help us with your take on the financials, because the harsh reality is that going ahead we will be witnessing some rate cuts, which doesn't bode well for the financial counters. But despite the fact it's Nifty Bank that is at all-time high levels, including some of the large cap names, valuation was comforting. But how are you looking at the financial space right now? Are you bullish, or are you a bit cautious, like you're overall cautious on the markets right now?
So if you look at top down, we are overweight on the entire financial services, but we are more selective. What we are incrementally changing is clearly the central bank is more in favor of growth orientation and improving liquidity, where we have upgraded Axis Bank, which I think today's correction on the management commentary gives an opportunity to build on to the same. So we would look at, we are looking for a more able to play out this momentum on the easing interest rates and the also the credit availability as compared to the recent weeks performance, where the quality stocks have played out in a much stronger manner as the flight for safety, and where they are, I think relatively the safer banks have been able to showcase a better deposit mobilization and hence a possibility of credit growth. But we feel as we go forward through the year, the others will join the case, and we are selectively also looking at some of the PSU banks where our preference is more for Can Bank as compared to SBI in the similar space.
All right, we are completely out of time on that. Thank you so much for joining us. We will let you go on that note. But moving on we are now